Yes, this is Javier with the Libertarian Investor, and this is a channel where we look at investing from a libertarian and Austrian economics lens. It's important to say from the outset, guys, that I am by no means an investment advisor. I am not certified in any financial discipline whatsoever. I'm just a normal guy who invests, and I put this information out there to have discussion, to have fun with you, and to share what I know, and hopefully you can share what you know with me, and we can make some money together. But none of this is advice, guys. And as I sit here right now, it is the beginning of the week. It's Monday, and we're already off to a pretty wild week, guys, in history. This is one of the first times in my lifetime where what we have been saying, what the Austrian economists have been saying, and people who are educated in Austrian economics have been saying for years, has finally come about in a huge way. As I sit here, guys, and it's Monday at 11:44 p.m., January 26th, silver is at $108.95. It just jumped from 75 cents in the last few seconds. There's a good chance it may get to $110 an ounce before I stop recording. There's a good chance. You never know. And we can never predict these things for certain. Gold, guys, right now, as we sit here, is sitting at $5,071.50 an ounce. I remember a few years ago when Peter Schiff was saying, guys, gold is going to $2,000. Just a few years ago, people made fun of him. Now, you have mainstream economists predicting that the price of gold could go to as high as $10,000 in the foreseeable future, $10,000 an ounce. And you don't have to be an expert in economics. You don't have to know Austrian economics to know that if precious metals are that high against what? Against paper money, it means that the paper money is losing its value. But those who are in power, guys, the powers that be, whether they be business or government, we're not bashing anyone. This is just the nature of power. They want the economic numbers to look good. And if you talk to certain investors, you would think we were in Valhalla, because the economic numbers that are coming out, guys, and a lot of annual reports are coming out this time, and we're watching them closely. We're going to be telling you about investments that I'm looking at, a lot of which are just very expensive still, guys, but we have to be ready to pounce when those prices do go down. But people are saying that 2025 Christmas shopping season showed resilient, moderate growth. Total U.S. holiday retail sales projected to reach over $970 billion. This is from the Google AI overview of aggregate of all the news here. And many economists are predicting that this Christmas season, the total spending for this Christmas season, will cross above the threshold of $1 trillion for the first time in history, guys. Those are some impressive economic numbers, and governments are going to be using those to say, look, we're doing a great job. December 2025 saw a 3.54% increase in retail sales, unadjusted year over year, and a 1.26 rise from November, with strong performance in core categories. And it also says customers were more strategic, with in-store traffic on Black Friday dropping 3.6%, while of course online digital engagement increased. So the question is, guys, how do we reconcile these two? We see gold and silver prices breaking records, which means that the economy's in trouble, guys. Unfortunately, it could mean nothing else. It means that the fiat currencies are in trouble, because precious metals, as everyone knows, are a safe haven when people believe things are going out of control. So how is it that we had record spending this Christmas? And also, guys, there was record travel. More people traveled for Thanksgiving and Christmas. It's being reported by some economists and statisticians than in many years prior. Of course, a lot of that has to do with COVID ending within the last few years, but how do we reconcile these two? It's very simple, guys. We talked about in our last video where we spoke about the S&P 500 chart and how many people say, well, you make a lot of money, year over year, you're increasing every single year. The graph goes straight up. But first of all, they're adjusting it for these fake inflationary numbers, guys, 2 to 4%. We know that the true inflation is 20 to 30% because you have to add in luxury goods. You have to add in precious metals. You have to add in the increased stock prices, guys, that are just breaking all records as far as the cheapest stocks you will find are 25, 30 PE ratios. You used to look for a company with a 10 PE ratio. Now they are multiple PE ratios. People are spending more money in that. So inflation is a lot higher, guys. That explains this enigma. First of all, the increased spending, guys, is due to inflation. I would ask you, are people really purchasing more goods than they were, say, 5 or 10 years ago? Or are they just spending more money in total than they were 5 to 10 years ago? I would say it is due to inflation. And I believe, guys, that very, very soon we are heading into the bust cycle or the bust phase of the Austrian business cycle. Of course, what we're seeing in December is what economists call nominal spending. Because again, real spending would be buying more goods. So if a family spent $1,200 this Christmas instead of $900 last year, they probably just paid higher prices for more or less the same that they were getting. And of course, the problem with statistics, and Ludwig von Mises talks about it in his books, and many other great Austrian economists do, is that you can't have an aggregate. So if people spend $1 trillion, that doesn't really account for the details of what they spent it on. So that information has limited usefulness. It has limited usefulness because it really doesn't tell me what they bought, guys. Also, consumers are still spending, guys, into a bust. A lot of people have some psychological consolation that Republicans are in power. When Republicans are in power, people generally think the economy is getting better, when the real numbers are not reporting that, guys. When the real numbers are not reflecting that. So I would say, don't listen to the government numbers. They always fake the numbers, guys. Governments always fake numbers. They fake statistics. It's very easy to fake statistics, and there's a very famous book called How to Lie with Statistics. So from an Austrian business cycle perspective, and we talked about that in past videos, you can watch that or study the Austrian theory of the business cycle. Artificial credit keeps the party going, and that's exactly what Trump wants by artificially lowering interest rates. That's why they're going after Mr. Powell, who is the chairman of the Fed. And while he's not perfect, guys, he is my favorite Fed chairman for a long time. I think it's because he has a background in business. Mr. Powell is not an academic. He's a businessman. He comes from the banking sector. But he is not simply theoretical. He's looking at the reality on the ground. And he says that we need to stop a lot of this easing or it's going to cause more hyperinflation. What the Trump administration wants is to continue these inflationary numbers so that they can say, look, the economy's great. And Trump said as much in the World Economic Forum this week when someone asked him about lowering house prices. Housing prices need to come down. And people who invested in houses made a bad investment. And the crash is coming. But Mr. Trump said, no, we cannot lower housing prices because I do not want to hurt those who already own houses. So you're not going to allow the market to do its work. And what's going to end up happening is more young people are not going to be able to afford houses. And that part of the quote unquote American dream is going to be out of reach for many people, unfortunately. And it's simply because you did not allow the market to do its work. So the Fed spent years suppressing interest rates, encouraging debt, and purchasing saving. And what this teaches the consumers to do is moral hazard, because it teaches the consumers to consume first, worry later, and then credit becomes a substitute for income. People charging things on credit cards. And you see this less so now because interest rates have gone up, especially on credit cards, but you're still seeing this. And what the powers that be have to do is they have to sit back and allow the market to clean all of this bad credit out, allow the bust to happen, then we can come back with a little bit of pain. But if they keep kicking the can down the road, there's going to be a stupendous crash, and there's going to be a lot of pain, unfortunately. Looks like that's where we're headed, because Mr. Trump wants to appoint more people in the banking sector, in the Federal Reserve, who will do his bidding and keep artificially lowering interest rates. Of course, we know all this. Real wages are stagnating. All you have to do is look at precious metals. Why are they so high? Because fiat currencies are so low. And I'm looking at Zero Hedge here, and it is talking about the fact that silver is now like GameStop. Now, as much as I support silver, guys, I would say be cautious. Peter Schiff and others are saying that it's time to buy. It's going to triple and quadruple, and that's so in the long run. But I do not know if we're going to see a crash in silver in the short term. It has gone up so high, so fast, that I think there may be a correction. So right now what I'm saying is, don't buy too much silver immediately. Keep watching the price. And when it goes through another resistance level, say 120, and you see it keep going up but sort of stabilize, buy on that stabilization. I think it's going to 120 very quickly. Now, could it crash back down to 80 or 70? I think it could, because a lot of silver shops are buying silver now for $20 under spot, at least $8 or $9 under spot, but up to $20 to $30. I've seen silver shops buying them under spot because they're afraid of the fact that silver may crash. It's gone up too quickly, and many Austrians will disagree with me, but I believe that is the case. You've got to be very cautious in this gold and silver market. So yeah, guys, it's a wild week. I just wanted to address that. Why do the economic numbers from Christmas seem to contradict the narrative of the business cycle theory that's being borne out with precious metals prices? Again, I think what you're seeing is mostly inflation and mostly smoke and mirrors. In the next video, we're going to be talking about some of my investments, what I'm looking at, guys. Again, none of this is advice, but this is just so that you can see what I'm looking at. We can have a conversation about it. So thank you guys for joining me. If you enjoy this kind of material, please do subscribe to the channel, like the videos, and we'll keep making videos every week about libertarianism, about investing, and about how you and I can live free in just a short amount of time. So until very soon, guys, have a wonderful evening.